Hi there, traders. Now, just back in time after a few days break. Now, obviously, everything's in play here for the yen, right? Obviously, everyone's talking about it, the news services, the discussions in the trade zone there. Are they going to remove the end of the yield curve control? That's the big thing. So now let me just give you a bit of history around the Bank of Japan. Now, the early 90s, they were intervening all the time, had loads of money. Then they wasted all their cash. They don't have a lot of resources left to sort of control things. Now, for them, a weaker yen is better, right? Makes Japan competitive globally. But obviously, they've got a situation here where they need to start pulling out some stimulus out of the economy, and they're sort of caught between a rock and a hard place. But now, go back to when I was in London. We had two of the head guys, and I was trading the yen in London for Citibank. They came back from Japan. Unbeknownst to us, they came back. Dollar yen was trading around 128 at the time. They bought one week or 2 week 120 the figure puts. Okay, so and within one day, the Bank of Japan had intervened, and these guys had made about $5 to $7 million each, walking around like they were geniuses. It was the biggest insider trading thing I've ever seen. But So what I'm trying to say is there are leaks in the Bank of Japan, right? And the way this thing is trending, like you got to think, for all money, they are doing something. It's either the complete end of the yield control or some measure of it. Now, what you have to understand is factored in, that this is factored in. Not entirely, of course, but a large measure here. If they didn't do anything to the yield curve, as in like what their control measures are, then you're going to see dollar yen up here again. Now, that would benefit Japan. But international trade, the US is always sort of muscling Japan into a sort of corner. I think, it's a bit of a tricky one, right? So what you're ideally looking for is just plan the trade. You can't really sort of go, okay, yes, they're going to do it or not. You can either have a trade up here trying to catch a move where they don't. That's easy because we've got a trend line. Now, that's 400, 350 points above the market. I don't think you'd be waiting that far, maybe just above 130 because it will jump very aggressively. But if you're looking to get into the trade, you've got to try and find somewhere to get in if you think they are going to go. Now, I saw some good discussions on the in the trade zone because everyone's looking at different yen crosses, right? To me, we've got a lot of good setups. And just even using don't forget, Japan's going to be rocking and rolling. It's the main session. They are going to be using the cloud. So we've got a lot of entries here below the clouds. Okay, if they did do something crazy like euro yen's already gone. Sterling yen hasn't. CAD yen, well, it's on the verge. So we've got some potential opportunities here for a move to the downside where we've got clear entry levels and even dollar yen for that measure as well. So that's what I'm looking for. It's not about, okay, what are they going to do? Prepare for what can you trade logically if they do take away the yield curve controls, right? Yen would appreciate further, and you see a lot of these yen crosses go. To me, euro yen has the hardest setup because it's already broken down through the cloud, and then you've got these other pairs which do look very good. Now, ideally as well, I would be sort of sitting there and I just take Aussie yen for an example, coming back over here and drawing some trend lines just into the recent sort of trend lines, and you can start to see where you've got some sort of itchy barn strategies here. We get the trend line and the cloud matching up. It's a bit of a no-brainer, but this is we know that happens. But this is the hard part. We don't know exactly what the Bank of Japan's going to do. This trade here, right? If I just keep my pen back up, change the screen, right there. If the Bank of Japan say, okay, look, we're going to get rid of all the yield curve controls, this trade's in play. But what happens? This is what you've got to consider. What happens if they take some further measures like they did last time, just push them out a bit without doing a full one? Like, it's very hard to go from wham, like here to there. They may do some steps like an interest rate sort of change like a lot of central banks do. So you got to think about that. And what that should do is put some uncertainty in your mind around the trade. Now, if they do remove the yield curve controls, then it's going to be a pretty big move. So you don't need to have a big trade on. Just be aware, I would be thinking if you have a position on here, you're probably looking for a 40, 50 point stop loss. So if your normal trade size is like 5 lots, I'd be going down to 2.5, 2, or even 1. You just want to get something in play here. You do not want to get run over on the announcement, right? As I said, that's the hard part, because it could be quite convoluted the way they present it. And that's where things go a little bit crazy, right? So that's what, all my take is. Just be aware of the overall risks. We know what's sort of going on. Keep an eye on the equity markets. This will be a really good measure here, the US equity futures, as to what the impact is, right? So the trade may not be instantly, but if we start to see the US equity futures run one way or the other, that will generally impact across the currencies. Of course, the yen is going to be the main game. If I just come back across here, you want to just have up on your screens, clear drawings, the right information. So one thing I've got here is the currency relative strength. All right, so I'll be looking down here at the yen pairs. Obviously, these should all be the one direction, right? And if you see one pair that's lagging, well, maybe that's the pair you can get into after the fact. All right, so a lot of risk around the event. If they don't do anything, dollar yen goes straight up, the yen comes off, and it'll be quite chaotic. This is the first time in a very long time that we've seen the Bank of Japan really come to the market with something. Now, back in the day, the yen was the beast, right? It was on for young and old every day of the week. It was crazy, the craziest currency. Are we going back to that? Well, I hope so. But in the meantime, just manage this event. Reduce your trade size. Give yourself some huge parameters. And by all means, pick off one of those crosses. The below the cloud looks a good deal if they do remove the yield controls. Maybe euro yen, actually, just while I'm thinking of it, if it was the sort of the odd one out, but if they didn't do anything, well, this one here, these other ones are sort of already going up. This could give us a good entry level there as well. Anyway, exciting times. We've got about 3-4 hours to wait, 3.5, 4 hours. So don't sit at the screens, come back, check it out, see what goes on from there. All right, guys, good luck and all the best.